Hey there guys, welcome to my channel. I'm going to put out a weekend video. On this channel we cover technical analysis of the stock market, and so far this has been a really good market for traders. Anybody who's actively trading or anybody who's just looking to establish positions at good levels, this market has been trading very technically sound, and so hopefully that continues because honestly, it's been a pretty easy market to call and to actually trade. So hopefully that continues and we continue to see price action reacting around the levels that we're defining. So let's get right into it. Again, I like to put out these weekend videos. It helps me approach the charts with a clear mind, and there's no active trading happening right now. So just helps look at the charts objectively without any distractions. So hopefully you get some value out of these weekend videos. And a lot of the time on the weekend videos, I like to take a step back and look at the bigger picture of things, just so we can keep our barometer on where the market is, where the macro environment is at, and where it's potentially heading. I think that's important to take a step back sometimes. A lot of the time, new traders, and I did it myself when I was a new trader, you get caught up on the 1 minute charts, which is what we're looking at right here, or the 5 minutes, the really short time frames, and then you end up just chopping yourself to death, taking trades on levels that you're finding on the 1 minutes, and why did it not react around there. And I think it's important as a trader to take a step back, look at the larger time frames, and look at the dailies and the weeklies, just to give you that idea of, okay, the ship or the barge is pointed this way, or the economy is pointed this way. We'll have small gyrations around there, but it should continue to hold. And until that bigger picture changes, that's how your focus on the smaller time frame should continue to be. Your mindset should be, if you see bearish macro setups and bearish charts on the larger time frames, then your smaller time frames, you need to focus on those bearish setups and looking for those, because that's how that should continue to play out. So all right, so let's get into it. Again, I'm primarily a Qs trader. I have traded the SPY in the past, but more recently this year I've focused more on the Qs. Even though the SPY's been a pretty decent ETF and index to trade, I like to focus on the tech stocks. I think a lot of money has been hiding out in these tech stocks, and when that selling comes, that's a lot of money that's got to come rushing out of those stocks. So I'm trying to capture some of that by looking to the bearish side of tech, and that's been pretty profitable for the last month. So let's get into it. Here's the Qs. I'm looking at a 1 minute chart. I just want to show the price action that we saw on Friday. And if you watch my last video, if you haven't watched it or you're new to the channel, go back and watch the last video. I put out that video and I said, okay, I'm getting short. I got short right up here at the top. Now, I didn't have an opportunity to put out a video prior to this hitting this top level and say, okay, here's a good, in calling the entry. But if you watched a couple videos before the last video, you would have seen, and I did call out this level 192, 60 or so, and I said, look, this is your resistance, mark it down, and if we get up there, that's an area that you could take a shot at the short side. And that's exactly what I did. And on Thursday, in the last few minutes, we just popped right into it. I grabbed the short position right there, held it overnight, opened up Friday with a nice solid gap down, and I covered my short position on Friday pretty much right at the open. I was watching it to see if maybe we'd get some failure. I knew that we had support right down here at 185.86, and we were just a little bit above it. We're $1 above it. So yeah, I could have gotten a little bit more, but with a big gap down like that, and with support not that far below, the risk reward, a little bit more reward. There might have been a little bit more profit to gain from the open. You had, not even 1% to gain. And if this thing found support and tried to fill the gap, it would have given up, 3%. So that's a 3-to-1 risk reward. I always look at things as a risk reward. Is there more risk to losing more money then there is a reward of gaining that, what's the proportions of that. And that was a 3-to-1, so not a good risk reward. So it made sense to cover right there. So I covered, and then what I was watching throughout the day was this thing was just bouncing off of this 185, 86. And I've seen this a couple times where we get down to these support levels and we just are kind of bouncing off these levels. And a couple of days back, I was scalp trading just like this, around a level like this. And you could have done it on Friday, right? When we get down to this 185, maybe undercut it slightly. You could have gone long, and then it'd pop up, grab a buck or two. Again, I'm not looking to the long side anymore for trades. We had our long trade already on this bounce, and I'll show that here in a second. So I'm more interested in the short. And that's what I was explaining. That's why I got short right up here, is because I think there's more opportunity now to the short side. And so I was watching this. We gapped down. I was watching this, and as we started to bounce, started to climb up, I reestablished my short position. Although this time I only took a half size, did not take a full size position. So I took a half size position and reestablished that. And then I was done for the day at that point. I pretty much walked away. I figured, okay, to the upside, we could get up to 192, but I think that we're going to fail. A lot of the time, when you see a gap down like this, we ran right into resistance, gap down. We had our opportunity. The upside I felt like was over, because this move right here, this shoot up move and where it closed at right into resistance, is just, you have to think of the mentality of people who aren't watching technical levels. That looked bullish, very bullish. Pop right up, nice solid close with most of the gains happening in the last couple minutes, kind of like a pump basically to make the market look like it closed better than it did. And I mean, yeah, it closed good, but it wasn't strength that was sustainable. It was just strength that happened in the last few minutes. Sustainable strength, you would see this thing, moving up throughout the day, getting up here and then maybe chopping around a little bit, struggling, but having a lot of reactions and price action around that level. That's a lot stronger of a chart. To get up there in the last couple minutes, that's just, that's whatever that is, plunge protection team or whatever, but it's it's buying coming in with the sole purpose of pumping the market up to this level and getting the close right up around there. So that was the opportunity to the long side, and that I think is over, because it was instantly rejected the following day with a gap down, couldn't even get back up there. And then you'll notice at the end of the day, last half hour or hour, basically just impulsive selling came in and just smashed this thing down, and we actually closed at the lows of Friday. So that's very weak action. I mean, you have to think like the mentality of the participants. That is, action to come in the last hour and smash this thing down to close it at the lows is that's very weak action to get that happen. And that's on a Friday. So anybody who thought that we were maybe going to hold this level, and maybe they checked out for the weekend. A lot of the time these professionals will make their moves and smash the market down when nobody's watching. That's kind of the name of the game. So that's why you'll see a lot of gaps, a lot of gap ups and gap downs in a bear market, and then you'll see these moves that happen where people are just trying to move the market when nobody's looking. So very bearish. We closed below support at 185.89, and went into the weekend bearish. So this could be a bear trap. I mean, I could see us gapping up. We could even gap all the way back up to this 192. That's completely possible. Again, this market is very choppy and very trying to trick people. But I suspect, if I roll out to the daily charts, I suspect we had our bear market rally already. Here's your this is your bear market. This is the trend. All right, the major trend right now is down, not up. We broke the bull market uptrend. Go back and watch. I show that in many of my videos. I talk about that. And so now the trend is down. So go with the major trend first, and here's your counter trend bounce right up into resistance, and then a failure. So I suspect we start to fail now over the, this week or next week. I don't know how long it'll take. Maybe the selling will pick up and we'll get a really, big impulsive leg down again. We had a really big fall already, so I'm not sure if this is going to be the next move down is going to be as impulsive. I think there was a lot of people caught off sides and there was just really fast repositioning. But now that's probably taken place, so I suspect that the move down now won't be as impulsive. We'll start to work our way lower at a slower pace. But I still think we're heading lower, and here's your targets. Well, here's my targets. You've got this level right here. This is your December 2018 lows. The SPY's already hit that. Q's has not gotten there yet. I think the Q's gets there. So 143 would be kind of a bigger target. And then we've got this, T1 and T2 down here that I marked out, 115 and then 98. That comes back from this range when we were trading in this range back in 2015 through 2016. I think we're going to head down there over time. Going back into the shorter time frames, just very bearish candle right here, taking out that support level. So next level to look for, let's see here. We've got, I have to mark this out here for a second and see if we got anything. I think this 179 is probably the next level. We could look at, I've got this level marked out right here, 182. I'm going to leave it up there. We had some reactions around there. You can see right in here, we had some reactions. Right in here, we had some reactions. And then right here, this red candle right here, we came right down, undercut it a little, and just kind of held it. So, and it might actually be just down slightly, something like that. It actually looks like it's closer to, about 182. And then we've got right below this 179.80 level. But those aren't major levels, there's not, we've had just some reactions just recently, so those are just kind of near-term levels. However, I think we're going to slice right through these levels, and the reason being is is the major trend. We moved down, we had the counter trend bounce, now we resume the major trend. So I don't see these levels holding up. They might get some small reactions on the daily or the 1 minute chart or something like that, but I think ultimately we make our way down. So what could happen, one scenario is we kind of chop around a little bit and just find a little bit of support, chop around, and then we gap below and we gap down and then start to move lower. Or we just start to work our way lower and these actually don't hold. We have some big negative news day and just a nice big impulsive red candle, setting the stage for the resumption of the major trend, which is down. Okay, so that covers I covered the 1 minute and kind of what actually happened, what that chart told me. I covered the daily charts and the hourly charts. So I gave you kind of the bigger picture idea of where I think the market's heading, and then also just narrowed it down to the 1 minute and reading what the what that chart is telling me from a from a psychology perspective. Moving on, let's look, and again, let's see what the futures do. They're going to open up here in a 5-6 hours, and let's see what they do. We've got support right here on the futures, 7352 for the NASDAQ futures. So I think we're probably going to open up or be trading down around this level into the open on Monday. That would make sense. And let's see here. What else do we want to look at? Microsoft, Apple. Here's Apple. Microsoft's a little more constructive, but Microsoft had a bad day. We can look at Microsoft, but let's look at Apple. So I was marking this out. This is your hourly. This looks like about where it's at. You can adjust this line a little bit. Maybe it's here. And it has room to be adjusted slightly right within here. So a couple more data points. Maybe it's that. We can give it the benefit of the doubt, but excuse me. But so there's some room, a few more data points, and it'll show itself. But I think it's clear enough to know that it's right within here, and it's a downtrend. On the downside, we only have 2 data points here and here, so we don't have that many. So we need a few more. But this is what I marked out for now. This is the downward channel I think we're in. So ultimately, I think Apple, at least from the upside, sorry about moving the chart, this line up here, this trend line looks a lot cleaner, and I have some more data points to build that off of. You know, I got one here, we overshot it a little bit here, but it still held. Couldn't quite get there, couldn't quite get there. Got, you know, right there, overshot it slightly and rejected right there. So it's right here. I mean, we're right in that area. And this looks pretty valid. So a break above this would be bullish, and a break above this, I'd see us going all the way up to this black line right here. So that could happen. If Apple has a breakout above this line, then it could, to the long side, be a trade all the way up to this 281. And it would probably get rejected right around there. But I think more likely as it continues to move south. And I think ultimately this trend line right here probably will turn out to be valid, but it's not valid yet because we only have 2 data points. So anytime you see a charter or someone trying to do technical analysis and all they do is have 2 data points and they're saying like, oh, you know, we're heading down here, this is the trend line. That's not the trend line. You can't say a trend line is valid until you at least have 3. The more data points, the better, but you need a minimum of 3. And I see a lot of guys having their trend lines wrong, you know, and so I think that's just something to watch out for. You know, you need at least 3. So right now, this trend line is not a valid trend line. We only have 2. So we just marked it out just for a, you know, just to watch it. But I think we're going to head south, and then at some point we'll establish the downward trend line in this channel. So Apple, I believe, is heading south. We could look for horizontal support here. Let's see what we got going on. I see some support right in there. Yeah. So there's some support. Yeah. So we'll just go ahead and say that's really the next target that I can see. The cleanest target that I really can see is right there. Yeah, we got a little bit of support right here as well. Looks like. See, this one covers the top of this range here, and then you also have this gap. If I zoom in, see the gap right there. So we'll mark that out. I don't know where that's going to fall. All right. So there's our next targets on Apple. 230, 22, and then a break below that, 217. So there's your next. That's what I see as the next levels of support. However, you know, we already undercut these right here on this candle. We fell right through those support. We held this one, so this one was pretty valid. 217 looks pretty good. And then we gapped up and moved higher. So a move back down to these is very weak. Usually when you approach support for the second time, usually you're going to break through it, especially in a downtrend like this. So I think that if we start to head down here, I think these aren't going to hold the next time around. I mean, you might get some reactions around them, you know, but I think ultimately they give. So that's Apple. Apple's important to follow because it's, you know, such a major player in the S&P 500 and the triple Qs that, you know, if Apple's falling, the market is going to have a really hard time, you know, moving up. And that's just because of the weighting of Apple. You know, as Apple starts to fall and get weaker and weaker, the indices will rebalance, and Apple won't have as much significance. And they constantly try to rebalance the indices to keep them, you know, not plunging and moving higher. So they look for the strong players in every market and they rebalance. Apple's been the strong player over the last decade, but if Apple is going to get weak and start to lose some of its authority, I guess, in the S&P 500, you'll see them rebalance, and then Apple won't be as important to watch. But for now, it's still very important to watch, so I always keep an eye on Apple. All right, let's look at the bonds, and then we'll wrap up. I don't even want to cover gold in this video. Gold's bullish. That's all I'm going to say. Watch some other videos if you want to see the levels. All right, here's your bonds. Corporate bonds. All of a sudden, there's a huge bid in corporate bonds. Everybody wants to own corporate bonds, even though, these companies, the economy is basically shut down. Well, that's because it's the Fed. I mean, the Fed's out here putting a floor in the bid. They're kind of creating the buyer of last resort. So anybody that's selling corporate bonds is most likely selling to the Fed. And, the Federal Reserve's balance sheet, I'll show that here in a second, is just gone parabolic pretty much. So we'll see how that continues. But I think these head south as well, these corporate bonds. Let me see if I can find a good level, because it's actually not, this is actually not a bad level to short these things at right here. It's not, right in there. I mean, it's not bad. You've got a little bitty reaction right in there. Let's see if this, here's a level right here. That's a little bit better right up in there. Yes, yeah, there it is. Perfect. You see, I've got reactions right along here, and then as you zoom in, you can see it came up into it. It was resistance, came down, held support, moved up, resistance again. Here's a little breakout candle, moved up, came down and held support. So, and then as we zoom, there's your levels. That's pretty good. I mean, this is not a bad level to short these. I might actually look at that on Monday, depending on where this opens up. If this wants to gap up and move up to this 124.50, then that's a good level to short. And it's actually not bad right here around 122.98. So I might be looking to short these things, even though the Fed's in there buying. That doesn't mean they can just hold these things up forever. The market is, most likely big funds are using this bounce as an opportunity to unload, and then, there won't be much left, there won't be any buyers of these things. So it will be the Fed, but they're going to probably just try to manage the fall. As long as this thing doesn't just fall straight down and they manage a steady decline, I think they're okay with that. That still doesn't mean that these are not going to go down. These could easily still go down. So corporate bonds, LQD, looking to short those probably on Monday, depending on where it opens. If it gaps down, I don't know if I want to short it right at this 118. I really would like it up around this 122. As close to 123 that I could get, I think is the area that these are better. So if it gives it, I didn't see this on Friday. I was, trading the Qs, but if it gives me an opportunity right around there, I'll probably take it. BND, this is your treasury bonds, and this is, again, Fed's just, buying a ton of these things, and I don't trade these. I'm not really interested in buying or shorting the BND, but I like to keep an eye on it. Bonds. In general, treasuries, you need to understand how these things move, what's taking place. This will give you an idea of maybe where the market is actually going to go. Okay, so here's the Federal Reserve balance sheet, and you can see, this thing is just moving straight up. It's gone up by, about $1 trillion, actually more than $1 trillion, it looks like, in the period of just no time, 3-4 weeks, it's gone up $1 trillion. This is the kind of move that you saw back here in the Great Recession, at the beginning of it. So, this thing has the potential to do, go straight up. And that brings up one final chart I do want to bring up, which is the DXY.